So you're buying a house and you're wondering what your best options are. I'm Erica Parker, Queen of Real Estate, and we're here today to tell you that. I'm here with Paul Lamnatosl with Blink Lending, and he's happy to tell you how to shop a loan appropriately. So Paul, take it away.
Awesome, Erica, thank you. So you've either selected a house or you're shopping lenders and trying to figure out who you're ultimately going to choose to work with, right? It can get a bit confusing. There's a lot of numbers, there's a lot of different parts to the process, if you will. And when you're choosing the lender or your mortgage company to work with, there's really three things that you want to find out and three questions to stay focused on. One, what's your interest rate? Two, does that interest rate have a monthly mortgage insurance with it? And three, what are my total lender fees? Why I highlight total lender fees and why I leaned into the camera is when comparing one lender to another, the only thing to pay attention to are the lender fees. And the reason I say that is title fees, they're set by the title company. From one mortgage company to another, lender does not impact third-party fees like title fees. Does not impact the property taxes, right? The property taxes for the house are already set by the county of where that house is. Homeowners insurance, mortgage company doesn't control homeowners insurance, right? That's us as buyers, we get to pick who we use as homeowners insurance providers. So ultimately, when you're shopping an interest rate or a lender, it's what's the rate, what's the cost associated with that, and is there any monthly mortgage insurance associated with it? You may or may not know.
Let me jump in. I walk into a bank and they say 0 closing costs. Like, what does that mean? What is that great for me? Should I definitely go if I don't have to put any closing costs in there? Like, what does that mean?
So it can be a good option for you. Erica, look, we've talked about this before, right? There's no such thing as a free lunch. You're paying for it somewhere, right? Mm-hmm. And when you walk into a bank or a credit union, you see the no closing cost options. Although those are great options, they might not be the best for you. Now, why is that? Well, on the heels of there's no such thing as a free lunch. A bank will advertise no closing costs, but in turn charge you a higher rate than what you qualify for. Mm-hmm. So when it's asked what's the rate and at what cost, I want you to imagine a seesaw similar to one in a playground, on one side being rates and on the other side being fees. As your rate goes down, your fees go up. But as your fees go down, the no closing cost option you just asked about, your rate goes up. So if you're someone that would normally qualify for today's rate of, let's say, 2.5%, and your normal closing cost might be $3,000, when you walk into that bank you mentioned, you're not going to have the $3,000 closing costs, but you're going to have a 3% interest rate. So your rate is higher than what the market allows for you. So although you're not paying your closing costs one time at closing, you actually end up paying it over the life of the loan or however long you stay in the house. So you want to stay away from the 30-year mistake, right? It's finding the right house for you is super, super important, but so is getting the right financing. And again, it starts with those three questions. What's the rate? What are the fees associated with that rate? And is there any mortgage insurance, monthly mortgage insurance that comes with that?
Thank you so much, Paul. And I really appreciate you coming on and explaining to my home buyers why it's really important to shop the loan. And if y'all are interested in seeing more of these type of videos and what is important in lending, go ahead and like this video below, subscribe to my channel, Erica Parker Now, or subscribe to Blink Lending TV, because they are going to throw out a lot more information for you as well. So thank you so much and have a great day. Bye.
Got you, Erica.